Welcome to Pique Your Interest, your go-to podcast for all things mortgage and real estate. Hosted by Tanner Greenwald and Tim Velasquez. We bring you expert insights to help you buy, sell, and invest with confidence. Let's dive in.
Welcome back to Pique Your Interest. I'm your host, Tim, and today we're going to talk about something that I think is becoming a little more prevalent in the lending landscape. We're going to talk about gifts. We love gift funds. We love knowing that there's gift funds available. We love gift donors. And honestly, with the prices of houses here in Maryland and just locally in the DMV, it's a increasingly popular way to come up with the money that you need for down payment and closing costs. So, if your mom, your dad, your Uncle Fred, whoever is going to be giving you money to buy a house, listen up. This episode is made specifically for you. So here's probably the biggest thing, like the biggest nightmare in lending as far as gifts go. I get a bank statement from someone that I'm working on, helping get pre-qualified to buy a house, and there's a $15,000 deposit in there, and I say, hey, what's this $15,000 deposit? And the answer sometimes is, well, my parents gave me cash because they knew I'd be buying a house. Now, it's great for you, right? Because you've got that money. The problem is that cash it's pretty much radioactive when it comes to underwriting. We need to be able to document where funds come from. There are, federal anti-money laundering laws that we're forced to follow. So we've got to be able to prove without a doubt where money comes from, and obviously can't do that with cash. So, if you're going to get a gift, number one, make sure you talk to somebody like me and let's figure out how that transfer is supposed to happen. So let's take a step back real quick and just talk about who can and who can't give you gifts. Really depends on the kind of loan that you're doing. Conventional loans are a little more restrictive. It's generally held to just, family members, fiance, really somebody that's actually related to you. When it comes to FHA and VA, it's a little more lenient. You could have, obviously a family member, close friend with a documented relationship, fiance. Employers can give money with government-backed loans like that. So, the FHA and VA loans are a little more lenient when it comes to things like that. So it's not as difficult. But knowing who can and can't give you a gift is a pretty important part of all of this. And so essentially, again, have a conversation with somebody like me so that we can figure out how that's going to happen, because, there's essentially, two ways to do this. You can have the funds sent to you as the borrower, and, those funds sit in your account. We get documentation from where the funds came from, show that they're in your account, and you're good. Now, with all gift types, there's a loan letter, very specific gift letters that lenders have, with verbiage, key verbiage in it that says that it's not going to be repaid. I've had people handwrite notes and send those in. That's, unfortunately not acceptable, but it's mostly, every lender has their own specific letter that they want filled out for gift funds. And so you need the letter that says, hey, I'm, mom and dad, and we're giving, $15,000 to our son or daughter for buying a house. We don't expect this money to be repaid. Sincerely, mom and dad. There's a couple of other pieces of information they fill in on there, but it's that accompanied with proof that the funds did come from them and that they are now in your bank account. One way to kind of bypass all of that is to have the gift funds sent directly to the title company that is going to be conducting your closing. The title company will provide us a letter that states, hey, we are in receipt of gift funds from mom and dad for, Mr. or Mrs. Borrower, in the amount of blank. And if you do that, then you bypass all of the bank statement stuff that we need to get from, you and mom and dad. So it makes things a little bit easier. One hack that I found over the years is that generally you need 30 to 60 days of bank statements, depending upon your loan program and what the underwriting findings are asking you for. If you have those gift funds in your account longer than that, if you're going to be buying a house and mom or dad are giving you a gift and they send you the money now, you don't write a contract for 3 months, those funds are already in your bank account. They're not considered a gift anymore. They're considered, seasoned funds because they've been in there for more than 30 or 60 days. So that's one way to kind of bypass the actual, gift portion of that. One thing I do want to say before I wrap up here is, probably one of the biggest questions that I get from people is, hey, mom and dad are giving me $25,000 for a down payment and closing costs and a gift. And, they want to know, am I going to pay taxes on that? And the answer is absolutely no. You do not pay income tax on gift funds that you get. Common question, but that's what the answer is. So I'd say the bottom line is, it's very prevalent to be getting gifts in this market, and it's great. It's wonderful. We love these gifts. We love gift donors. We love knowing that the gift funds are there and available, and how much you have access to. It's all good information. Let's just make sure, it's a common theme of this podcast. Make sure there's good communication with somebody in a position like me. Make sure you're talking to a loan officer. Hey, here's what my plan is. How do I get from A to B as quickly and efficiently and with the least amount of paperwork and process involved? How do I do this? And so, the sooner we start having those conversations and the sooner that, we formulate a plan, the better off you're going to be. So thanks for tuning in today. Hope you learned a little bit about gifts. If you have questions, I'm always here. If you don't subscribe already, please subscribe to the podcast or catch us on Spotify, whatever your preference is. Again, thanks for joining me, and I'll see you next time. Bye.